Oh, aloha everyone, Joshua Hayes at BigWaveTrading.com. My apologies for not making a public video on Wednesday. The FOMC created a lot of volatility in a lot of my holdings, so stop management took a lot longer than normal. That being said, let's get right into it. I'm going to start this off going over the SPY. We'll also look at the Russell 2000 in the process of looking at the SPY. I have two new quality long positions for Friday's session. Want to go over. Had very few stocks filled today. Two are way too thin to go over in this public video lesson, but I'm going to go over two that filled today that are liquid and how I'm treating them. And then we're going to go over, of course, of the losers and the winners. Had my first real earnings loser today. Didn't hurt, as I'll show you why, but the point is it's always risky to buy ahead of earnings. I normally don't do it. When I do it, it's heavily shorted stocks that I think can rip higher on a good report based on the way that the price action is, and it just didn't work out in one of the stocks today, so I'm halting my pre-earnings purchases. Normally I don't buy stocks that have earnings within the next 2 weeks, so after today we'll re-implement that methodology. But first off, I just want to go over the SPY really quick. Not really quick, but the SPY continues these V ramps. V. It's a little different, but still V back here, V. And we're V ramping again into new all-time highs. And why you see these lines here. So pay attention to these uptrend lines that we have on the SPY. I'll reference them in some indicators here shortly. But once again, every time we rally and volume contracts, whenever we pull back, we get heavier volume pullbacks. And it's just guaranteed. Every time we have a low volume V rally, you're going to get a harsh pullback. We saw in that later stages here, volume declines, harsh pullback. We see here, no volume on the uptrend move, harsh pullback. Well, here we go again, uptrending, and this time volume is just non-existent. I mean, it's not just below average with a little bit of white space, or I guess blank space in between, but it's just non-existent. In today's down day, even though we had a nice tail off the uptrending 9 exponential moving average, volume, once again, picking up clearly. And I'll let everybody know, markets love to fill gaps. We have that open gap from 1010 to 1011 still here. And I tell you what, it is going to be very hard for the volume to add on to any of these gains as long as that gap is open. We have no volume on the uptrend, and we have all these negative divergences. So actually, let me go ahead and remove the relative strength one there. I'll show you on time segment volume. It's going to be always harder to see here, but you can see time segment volume. While the SPY has rallied, you can see we just keep getting negative divergences, which each and every high. And now I almost have to curb fit just to get this thing in, to like line up properly. But you can see it's lower, lower, lower. And you can see from this high to this high, lower high. So it's negative divergence. So even though it's positive on a daily basis, which is good news short term, and now positive again on a weekly basis, which is the first step, I want to remind everybody, I have back tested this in the Dow Jones Industrial Average to the 1920s, the S&P 500, just to show you, the S&P 500 all the way back to the 1960s. The NASDAQ, I back tested this to the 1990s as time segment volume. And I can tell you, I track everything, MACD, RSI, whatever. But there's one indicator that when it agrees with, when it's uptrending above an uptrending moving average line or downtrending with the downtrending moving average line, you pay attention to. Now I can add that again with, I believe, nope, that's the wrong indicator. It's so hard for me to see these things. What is that? Balance of power. I think it's this one right here. So whenever this is really aligned, like in 2008 to 2009, this indicator and this indicator with this indicator, which is hard to see on this chart because of that move higher, but you can see here, we're red here on this indicator, we're trending below. That's when bad things happen. So when we look at it on a monthly basis, this indicator is still good, but you'll notice we've been negative, like I've shown you on multiple video lessons already on this thing since September of 2018. So there's been no real monthly bullish condition. And I've always said the easy money is made when this indicator is trending on the upside. You can see here, this was the bullish period of the market back here. So when the S&P 500 is moving higher, and I have the TSV confirming, that's good. But when it's not confirming on a monthly basis, and it's like that everywhere, and an IWM, that thing hasn't been positive since June of 2018. It's a rough, it's rough in stocks. It's hard to have conviction, confidence on an end-of-day basis. I don't put 5, 10, 20% of my account capital per new long position. I keep it small. So as long as we have these negative divergences everywhere, and I mean, this is everywhere. Let's just pin this to the side. Let me, excuse me, wrong one. Let me move pain to the side here. We can even see on my relative, nope, not the relative strength. While we have that up though, see the IWM? When the IWM is trending higher on this indicator, that's always a good thing. The best thing to see is a series of higher lows and higher highs. But it's never, it's never a game changer or a killer, but it's always good, especially, look at here in 2003, 2007, when the IWM is showing relative strength to the S&P 500. So until we break this downtrend line on the Russell 2000, that's just another negative for this market. It's hard to be bullish when we have no volume on the upside. We're V-shaped. We have that open gap. We have negative divergences on every indicator. Here's the RSI and MACD. The MACD, I didn't draw the lines yet, but let's go ahead and do that once we, you can see the IWM. There's still no bullish divergence there. Let's bring up the SPY. You can see the RSI. Let's lower this one. Negative divergence while we make higher highs. The MACD, negative divergence. So overall, we're not set up to be super bullish and expect the easy money to be made. The easy money is made when you have bullish divergences. So if the SPY was moving lower, but I had bullish divergences in the indicators, that would be a great thing, especially if I could get that TSV to uptrend, on that monthly time frame. But until I have any of these things lined up, it's going to be rough sledding. I'm going to continue to piecemeal small positions, 1% of my account capital. I run a large portfolio on an end-of-day basis. My day trading accounts don't have nearly the amount of capital as the end-of-day stuff. I'm not a good day trader. I'm working on it. I'm passionate about what I do. But the end-of-day stuff, this is what the website's based on. It's what I trade with confidence and conviction when everything's lined up, and right now we just don't have that. So with that in mind, let's look at the new long positions, the stocks that filled during Thursday session, and my winners and losers as we head into Friday session. So I've given out 2 new long positions already, and one CPRT was looking good until today. You can see it's rolling over. Now, do you guys remember what I said about that uptrend line? Just draw an uptrend line connecting the lows, and if it closes below it, you'd get out. So if you took that CPRT ad signal swing trade idea, it's got to be closed out. It is failing now. And this just goes to show the kind of market we're in. Now, that being said, as you can see, I'm long from back here, so I'm still working with multiple stops. I still have a stop here, a stop here, a stop here, and a stop here on this position. I'm just trying to show you how you would use this methodology if every trade you took, you went in with full size. Initially, it was looking good, but right here, it's not looking so hot anymore. So that's just the kind of market we're in. I also gave OSIS as a new long position. The trigger was 102.02. It has never triggered that long signal since giving that out to everyone, but it is still live and true on the books. A close below this low a day on above average volume, especially if BOP goes negative, the trade is canceled. But for now, it's still live. So that takes me to 2 new long positions for Friday. They're both earnings winners. IPHI, these are stocks that in a bull market, I have no problem getting long. But I realize the market condition we are in, so I know for a fact it's a riskier trade idea. So with that being said, I'm going to invest accordingly. I'm throwing 1% darts, which is still a very large amount of capital compared to like what most people's starters account would be at. and I'm keeping tight stops. So the game plan with APHI, it's canceling quality. It's in my Perfect Speculator quality scan, which was built off the book, The Perfect Speculator by Brad Kodeshwar, and it was in my new 52-week high scan on above average volume. I have a candle over candle on above average volume with max green bop. I'm setting my good to cancel buy stop limit order at 72.08. My first cut loss level is 69.52. Good to cancel sell stop at 69.52. A final 50% of my good to cancel sell stop at 67.25. You could either do 100% here, 50%, 50% there, or 100% up there. Everybody has a different risk tolerance. No two traders are the same. Or there's an uptrend line, moves below the uptrend line, you're out of IPHI. The other trade idea, SHOO. SHOO is hard to see on this chart, but trust me, it's closing higher than where it opened. If this would have been 41.18 and this would have been 41.11, this would not be a new long position. I have a hammer candle off hammer over hammer candle right off strong price support from yesterday, above average volume, and green BOP is increasing. If BOP would have been going the other way, if volume would have been below average, SHOO would not be a new long. What I forgot to mention about IPHI, why I'm getting long this stock, not only is it canceling Perfect Speculator quality, earnings winner beating on the top and bottom line, but depending on who your data provider is, it has around 15% of its float short. So I look at this as the shorts are trapped. We have catalysts to allow the stock to move higher. The same basis with SHOO. SHOO is canceling quality, was in my new 52-week high scan on above average volume. It also was, canceling quality, new 52-week high. It also is an earnings winner, beating on the top and bottom line, and it sports around 7% of its float short. So the game plan with SHOO, good to cancel buy stop limit order, 41.23. First cut loss level, 40.54. Final cut loss level, 38.99. I'm going initially 50%, 50%. You could do 100% here or 100% here, or you draw an extremely, almost like a 45-degree angle uptrending, uptrend line, I should say, and it closed below it, you'll be completely out. But SHOO and IPHI are the only two quality long positions I have for Friday session. I flagged many other stocks of interest to me, especially with some of them having a higher short float, but everything has earnings coming up. And like I said, because of what we're about to go over, if there's earnings coming up, I'm no longer going long. So with IPHI and SHOO out of the way, I'll show you what filled today that was of liquid size. Now, SILV was given out as a speculative long position on the speculative long page because it's below $10. And it has a history of sometimes trading thin relative to its overall average volume. But still, that being said, even volume down here, we're looking at 120,000 shares per day. So it was definitely liquid enough. The long signal on SILV was here. Bullish hammer candle off strong price support on heavier above average volume with an increase in green BOP. And I didn't see earnings anytime soon. So SILV was good to me. Metal stock, these have been doing well lately. Did not fill on day one, but it filled today, actually, obviously. But with me, here's what I'm doing. 50% of my stops here, the final 50% right here. If I feel bold in a strong market, I normally would go 33%, 33%, final 33%, but not in this tape. 50 and 50 is where my good to cancel sell stops will be heading into Friday. But also, you could use this uptrend line. And if it closes below this uptrend line, you're completely out of SILV. But SILV triggered and filled intraday at Interactive Brokers in my end of day account on Friday. So far, so well. Probably won't work out. Normally, right after I get filled, I'd like to see the session come with heavier volume or an increase in green BOP. It's going the wrong way. That always reduces the chances of it working. But if we always cut our losses, as you will see, the winners will take care of itself, as we're about to see after we go over one more stock that filled. UFS. UFS, I have SILV. I didn't enter into the system either. That's why you don't see a white arrow today on either one of these stocks. I haven't even added it to the system. But UFS gave me a signal this day right here. I was interested in it because this is the kind of pattern I like off the lows. Got higher lows. RSI, MACD, stochastics, they all have positive divergence. BOP has been above zero that entire time after on that most recent pullback, BOP stayed above zero. I had a big increase to green BOP, heavier above average volume, back-to-back pocket pivot point signals, candle over candle. I liked UFS, but I saw, once I liked it, that it had earnings on the 25th before the market opened. So here's the game plan with UFS. If it gaps up, the trade, it can't be called back on until it trades below 35.94. That's just a rule. I only want to get long these stocks up and through those price levels, not down back towards them. Because what if it comes down back towards them and just keeps selling off over and over and over? I want to get long via strength. If it gapped lower, as long as it didn't gap below this low right here, call the position back on with the good to cancel buy stop limit level at 35.95, and if it triggers, it triggers. Well, UFS was an earnings winner, so it gapped up, nothing I could do, but I set an alert, and as soon as it trades back below that level, I get alerted that it has. Once I then see the bid and ask and price all below 35.95, I call back on the order. Got my alert today, did that today. I'm now long UFS. That being said, still not that great because BOP is now going the wrong way. Technically, it's a bad day, but the 36.39 close is splitting hairs with yesterday's low a day, so it's still healthy. But that being said, this is now how I'm using my stops on UFS. 50% goes here. 25% probably goes right here because normally you could do 50%, 50%, but I want to be a little bit more proactive on this one. So 50%, 25%, 1 cent below this candle's low a day, which is the previous pocket, the first pocket pivot point signal, and then 25% right there. In a really strong market, I may give it all the way back there to work, but not in this tape. So that being said, you could also use this uptrend line now that I'm long UFS, and if it closes below this uptrend line, you just get completely out of UFS. So that's how I manage a stock once I am long. As you can see, if I lose on 50% of it, no harm, no foul, 25% there, even using those levels as stops, which, by the way, if it closes below Thursday's low a day, let's say by just even a few cents, and all of a sudden BOP goes red and it's on huge volume, that becomes my final stop. These stops become irrelevant and I move everything up. So now with that being said, let's go over my losers from today and the winners, and to show you how the winners should always be able to take care of the loser. Okay, so the first loser today is HTLD. You can see that the entry signal was here, and initially HTLD was working, up 3% heading into today's session. Unfortunately, I'm not even sure, but I'm 100% sure this was due to earnings. HTLD gaps down. Now, the beauty thing about good to cancel sell stops is that, you know, when I know earnings are coming up, I'm always marching stops up. But if they don't trigger, there's nothing I can do. So following my entry and this new high here, I add a stop here. Stock starts moving up here, I add a stop here. But when it started to roll over here, I went ahead and put another stop here. Thankfully, I did that because it knocked me out of a little bit of it yesterday. That being said, this stop wasn't touched, this stop wasn't touched, this stop wasn't touched, nor this stop. But once again, if you always use my uptrend line scenarios, you would have been knocked completely out yesterday. So it just depends on what you want to do. Everyone's different. But if you used it, you wouldn't have been an HTLD today. That being said, this is why I love stops, because at the open, it's immediately triggering some, getting me out. Then it gets me out of this one, and it came just a few cents away from my final stop because I can see right now, looking at my Interactive Brokers account, I still have this final position with the final sell stop at 2065, which is splitting hairs with today's low day at 2069. So I'm not going to go ahead and move it up to 1 cent below today's low day. I'll just keep it right there. But if you're trading on an end-of-day basis and you entered this stock with me and you got long with me, and let's say you didn't use any stops whatsoever and you're only trading on an end-of-day basis, what was the total damage today? Well, 3%. I round up on my losers when reporting them, and I round down on my winners when reporting them. So you would have lost a whopping 3% in HTLD. Now, this is the stock that's going to cause me to halt new long positions on earnings winners. HVT, I decided to take as a new long position because I have a position in RH, as you can see, all the way from back here. And RH is up 69%. And one of the reasons why it was easy for me to get long RH as an earnings winner is because the damn thing has around 40% of its float short. So whenever I decide to get long HVT, I looked up HVT. I knew earnings were coming up, but I know that it's an RH's sector, and it had 15 to 20% of its float short. With the way this looked off the lows, with all the pocket pivot point signals increasing green bop, I definitely thought that this was a good trade idea. This was the signal date here. It closed higher. Actually, I am wrong. This was the signal date here. So the 10:15, you get a hammer candle over candle, heavier above average volume, increase in green bop, the pocket pivot point signal. It doesn't trigger above 2061, hits 2061 this day, but triggers this day. I am now long HVT, and initially half of the stops are here, the final stop is here. But HVT started to work higher immediately. Now I added a stop here, but as you can see, it didn't hit it. It just kept moving higher. So unfortunately, from this moment of the long signal to this high, I have about a 4% gain in HVT. I have a 4% gain in HVT, but it didn't trigger any of my stops heading in today's session. And of course, HVT missed earnings. And whenever I saw it was gapping down in the morning, you could see that it was down around 10%. If I remember correctly in the pre-market, I take my stops that are here, 1, stops that are here, 2, and stops that are here, 3, and I aggregate them into 1, which was 1991. And as you can see, it opened at 1851. Triggering and filling me at the open at, let me look it up just to make sure, see what I got filled at. 18. I got filled at 18. So 1851 is where it opened, and I got filled at 18. And holy shit, I did not notice this. 5 minutes and 28 seconds after the open. It took 5 minutes and 28 seconds to fill me. That's crazy. That's how much of an order imbalance there must have been in that stock. But what's the total damage? If you took the trade and you took it as a loss, that's a big one. For me, that's considered a big loss, 12%. That's a big enough miss that I now go ahead and halt buying stocks ahead of earnings. A few stocks that I liked ahead of earnings that had a high short float that interested me. PRTK, hey, this signal on Thursday, that interests me right there. 33% short float according to FinViz. Got to pass on it. Earnings are next week. ZAG, this signal interests me. With 16% short float, got to pass on it. Earnings next week. BRRM, I'm interested in it. But with earnings coming up next week, 15% of short float, I got to pass on it. But all these are options if earnings are out of the way with their signals because of the high, heavy short float. BRRM, ZAG, and PRTK with earnings coming up, I don't think so. So with HVT's 12% loss and HTLD's, what was it, 3% loss, let's compare that to some of my winners. Remember, I want to remind everybody, I'm only long so many positions right now because the market, remember that time segment volume on a monthly basis, has not been aligned in over 12 months on all of the indices, including 16 months with the Russell 2000, and I went over everything that I have a problem with in this market. So with all that being said, this is why I hold so many positions. I can do it as I live on Maui. I have all the time in the world. It's all computerized. It's good to cancel sell stop orders in Interactive Brokers. So just keep that in mind as we go through these. But CDLX, you know, this one was a long position right here. This was the signal date. It's the same pattern always with me. Candle over candles or hammer candles off support on heavier above average volume or above average volume with the increase in green bop or max green bop. CDLX still working. 49% gain in a little over 3 months. SGEN. Since we went long, SGEN, 28% gain in, what is that, 2 weeks? A little over 2 weeks. You know, it's good stuff. GLT, here was the long signal here. 23% gain once again, you know, couple of weeks. You know, compare that to those losers. TRNO, this is a slow-moving REIT. Ever since its long signal back here and I got filled, 24% gain in a little over 5 months. So all of these winners almost always take care of the losers. Now, EGOV, you would have had to been patient on. Ignore this. This never happened. Telechart data is incorrect. I still have my entire position from Interactive Brokers. Check Trade Pro. That's the chart. This low held. So that's where my final stop was from this entry here. It went sideways forever, not doing anything. But finally today, There's a 12% gain in a little over 1 month. It took care of itself finally today. TPX, this was the entry signal back here, filled. There's something, I added the arrow. I must have gotten filled on a pullback here this day. I'll have to figure it out, but there's a reason why the arrow's there. This was the long signal. I got filled on TPX. TPX, 26% gain in a little over a month. So once again, compare all of these winners to the losers. TDOC, 21% gain in about a month and a half. It's working out. SPAR I added 2 here. This was the ad signal. 18% from the ad signal. This was the original long signal. Now remember, so if you say, hey, why are you chasing IPHI? Why are you chasing SHOO? I'm not chasing. These are intelligent positions based on historical performance of these kind of stocks. SPAR's canceling quality. You can see when I went long SPAR here, 47% gain in a little over 3 months based on the exact same pattern that IPHI and SHOO's extended signal is today. And then the final one I'll just look at, AKRX. Once again, these are my perfect oversold signals. Very rare in this market where the candle is just beautiful with the higher lows. RSI, MACD, stochastics confirmed, above average VOP. You don't have any red BOP except for this one day in here with the green BOP. And of course, it works out really well. Almost hit a profit target. I got a profit target out there at 546. It missed it barely today, but AKRX keeps going higher. 84% gain in a month and a half. And those are the kind of gains I get compared to the losers. And remember, HTLD is an extreme outlier. I'm super tight with my stops. I don't like losing money. And HVT is just a gamble ahead of earnings gone wrong. I mean, everything was there, the chart pattern, the short float, understanding the industry and sector. It just didn't work out. And it was the first stock to not work out this earnings season. So I'm done with these kind of plays. All right, everybody, long video, but we went over a lot. The most important thing to remember is that we are not lined up in the market. And there is never a time on an end-of-day basis that I get aggressive unless I get a perfect signal with my time segment volume confirming with volume on the indices. Listen, I'm sick of these 1% positions. My commission costs this year have been astronomical. That being said, the minimum amount is well over a few $1,000s per each of these long signals. I only pay $1 in commissions in with Interactive Brokers and $1 in commissions out because I use their trader workstation. If you use eTrade or Ameritrade and use my methodology, it's possible to put either 100% of your stops at $0 at break even, 50% at break even, and then use the recommended stops that I have, and you'll never lose money. With me, even 1% is a nice size. But 5, 10, 20% positions, I don't put those out there unless I get like a signal that would, NRC failed, but like I need a stock to look like NRC. These are signals that when the time segment volume is proper, there's volume on the indices, the Russell 2000's leading, and I got more and more things lined up in my favor. If I get something like this, you better believe I'm putting 5, 10, 20% of my account into it, especially the gardeners outside. If you hear anything in the background, my apologies, the lawn man. That's whenever I push it. But in this tape, look at what a beautiful signal like this ends up doing. Nothing. Then I get a secondary. This is another beautiful entry signal. But look at what it does in a tape like this. Nothing. You know, they're very rare. These are the kind of signals that I love to get and I love to load up on when I get them. This one was a bit better, this signal right here, because time segment volume on a daily and weekly basis was lined up. But still, once again, the monthly wasn't lined up. Unfortunately for me, ARWR worked too perfectly. It ripped right through my good to cancel buy stop limit order and didn't fill me. Now in a better market, half of my order, like if I do 20%, 10% is just at a limit to get filled anywhere under 2208. The next half is with a move above 2208 to trigger 2209. And you can see ARWR worked fabulously. That's got to be where it like topped out. And as you can see, this is a stock that I would have loaded up on 57% move in 3 months. We're not getting those setups right now. And not only that, the market isn't lined up for them. Oh man, I didn't even realize it. I've already been knocked out of ARWR, but it just keeps working. 82% in 5 months. So that's what's possible, but that's not what's here right now. We're at the 30-minute mark. I'm ending this video. Thank you for watching. If you liked it, give me a thumbs up, retweet, reshare, and if you have any comments or questions, leave them below.